Good morning, everybody. I think we're going to go ahead and get started. Can I just get one confirmation that you can hear my audio? Great. Thank you. Well, thank you for joining Coalition's monthly webinar series. Before we dive in, first just wanted to acknowledge Veterans Day in the US and Remembrance Day in Canada, and give a thanks and recognition to all the veterans who have served our countries. Today, we're going to be talking about two powerful updates that we've released, Coalition's Claims Calculator and our Coalition Risk Assessment. And these two products are market leading and are really exciting to be able to help explain and demonstrate the value of cyber insurance to your clients. So we're excited to introduce those and walk through how you can use those in conversations with your clients about cyber insurance. My name is Jen McPhillips. I'm going to be moderating the conversation today, and I'm excited to be joined by my colleague, Sean Ram. Sean leads all things insurance related at Coalition, and he's been here since the beginning of the company 4 years ago. And he leads all things related to distribution, underwriting, and claims. So has kind of the broad understanding and expertise about our entire insurance and claims process. First, a quick note about who we are. So Coalition is the fastest growing provider of cyber insurance in the US and in Canada. We're proud to be able to offer up to 15 million of limit in the US and 20 million in Canada of comprehensive cyber insurance. But one of the things that makes us unique and different is all of the proactive security measures and our security platform that we offer to help our clients manage their cyber risk. And the two tools that we're going to be talking about today are Claims Calculator and the Coalition Risk Assessment, are two sort of exciting updates in the risk management services that we offer to our clients. I'm going to talk through the agenda. So first, Sean's going to walk through some of the data that we collect here at Coalition. And this is all of the data that powers both our underwriting process, our ongoing risk alerting and mitigation services. And this is the data that we've then packaged into these tools, our Claims Calculator and Coalition Risk Assessment. Then Sean's going to do a demo of both of these products and sort of walk through how you can access these from your Coalition dashboard and how you can use these in conversations with your clients. And then finally, we'll leave some time at the end for questions. And then one quick note before we dive in, you should see at the bottom of your screen a bar with two buttons, one that says Q&A and one that says chat. We'd encourage you to submit questions into either of those throughout the conversation, and we'll also leave some time at the end for dedicated Q&A. So with that, I'm excited to introduce my colleague, Sean.
Wonderful. Thank you, Jen. It's a pleasure being here, and I'm grateful for each of you that have decided to spend a little bit of time with Coalition. I'd like to echo Jen's comments around Veterans Day and Remembrance Day. We have a number of colleagues who are veterans, and we're grateful that they are able to spend some time away from the office, the virtual office, and remember the time. Thank you for all the service for any of you that are veterans here on the call today. So I'd like to begin. Our purpose for our discussion today is to discuss the Claims Calculator, which we announced, as well as this new Coalition Risk Assessment, an updated version of what we did in the past in terms of our cyber risk assessment. I'd like to begin just by describing how did this come about? And the reality is, given how Coalition operates, our ability to obtain and extract data to understand data associated with the cyber insurance and claims process is unique. And so we were able to have a sufficient amount of data where we felt like there was statistical integrity in terms of releasing these two tools. And I'll talk a little bit more about them. But first of all, on the next slide, just to kind of provide some context around how we go about this. So many of you are aware that Coalition, we went out, we built our own policy form, we went out and built a rating model. But we also built this collections platform we call a signals intelligence platform. And what it does is it goes out, as you're aware, and scan the internet for tens of thousands of signals on a given account. Now, we do that for every submission we receive. We also do that for every company that exists. We're constantly scouring the internet to better understand cyber-related security and risks. So we acquire all this data. And so I'm moving from the right-hand side of the page to the bottom in terms of acquiring data. But then what do we do with the data? So we use that data, one, to provide security tools, as you're aware, to all policyholders. And that enables us to acquire even additional data. We obviously improve underwriting. We learn from claims and we adjust that. But then I'd also like to highlight that we, as many of you are aware, Coalition, we also have our own incident response team. And when that incident response team is engaged, we're able to learn even more insights about how a cyber claim is derived and what are root causes. And we learn from all of that information. Well, all of those three buckets, kind of security tools, improving underwriting, and a better claims experience for your policyholders, enables us to lower losses. Well, as we lower losses, we strive to broaden our coverage and improve our pricing, which leads to more customers. And then this feedback loop continues. It's complete. Now, many of you may look at this and say, hey, this is like really normal in insurance, which it is, right? In property insurance or other lines of coverage, it's very common for an insurance company to have a feedback loop. However, in cyber, it's not as common. Most insurance companies leverage third parties to handle things like incident response services or even like security tooling. Because of Coalition's attempts to do this in-house, our ability to acquire data and present to you tools like we're going to discuss today are pretty significant. On the next slide, I just kind of summarize this, right? So our data, as respects to the tools I'm going to share with you today, derive from a few different sources. One, policyholders, right? Security trends that we see amongst our policyholder, changes that are occurring, and obviously what's occurring in the claims process. This is actually really cool and unique. We've discussed in prior webinars the concept of how things have changed in the middle of a global pandemic, and understanding the nature of those changes at a very micro level are helpful. We do use market data, so specifically NAIC, and then insurance applications. We use loss runs that we receive for our policyholders or just for submissions, other application related information. Now, because Coalition, as many of you are aware, is a technology company who spends its entire time and effort dedicated to the insurance industry, our data collection, underwriting, and our risk engineering capabilities are pretty unique. And enables us to deliver this product that we're going to show today. All right. So we're going to go ahead and move on. What I'd like to do is describe a little bit around what does this data show. And a few months ago, we did a webinar regarding the Coalition Claims Report. And we're going to go ahead and send a link in the chat feature. For those of you who have not seen this report, we'd encourage you to download it. There's a tremendous amount of data in that report. But there's a few key learnings that I'd like to highlight. The first one is the most common cyber-related incidents we see. And here you see that as respects to the claims that Coalition has seen, and with over 15,000 policyholders, we definitely have our fair share of claims. But ransomware is the top cyber incident. Now, not surprisingly, right? Today, ransomware is a plague in the cyber insurance and security community. Secondly, funds transfer fraud. Some of you might kind of refer to this more as like people who are social engineered, and funds that are fraudulently transferred away from policyholders that are intended to go to either, for example, vendors or even at times employees. And so that represents 27% to the second highest kind of claims vector that we see. And then finally, business email compromise. The most cyber attacks originate through email being compromised in terms of the root cause. And that's concerning, right? And representative of these three items, it's 87% of reported claims that we've seen at Coalition. Now, this is important to recognize, right? As we've thought about this idea of a claims calculator in the past, the industry has been so focused on data breach. It's been very focused on losing credit cards and personally identifiable information or health information. And although these types of claims are still prevalent and still occur, from our data set, it is not the core problem today. Adversaries recognize the lucrative opportunity that exists with ransomware and funds transfer fraud. On the next slide, we dive into this just in a different view, where we talk about kind of the claims by attack technique, how these are actually occurring. And I just thought this would be interesting for you to see. So again, highlighting email as the most prominent claims attack variant. Phishing, individuals clicking on links that they shouldn't be. Frankly, policyholders who aren't using multi-factor, otherwise two-factor authentication on their emails. Remote access is the second attack vector. So we've had extensive conversations in prior webinars about remote desktop protocol and this particular ability to access desktops remotely that are publicly visible on the internet. And if you look on our dashboard, you can go back and see some of these webinars where we talk about how prominent an issue that is. And then you can see these other areas like other methods of social engineering, a third-party compromise, or just brute force methodologies to get into a network. But if we are able to solve email and phishing, and we solve remote access, particularly in a world of remote working, as you in the broker community are speaking with policyholders, I would just encourage you to be very focused in these areas in order to truly help manage the risk of your policyholders. And not surprisingly, these are also the areas in which we have focused as respects to our claims calculator and our coalition risk assessment. So what I'd like to do is show you some of these things. And so I'm going to go ahead and share my screen and describe to you a few of the things that we've been doing at Coalition and have introduced to you in the broker community in an attempt to help you better manage the risks of your policyholders. So what I've done here is I've logged into the Coalition platform. And as you're aware, we have this broker resources tab that's available to you. And there's a variety of things that haven't changed here, right? So we provide policy comparisons of various policies. There's overviews of Coalition. There's a guide to reading our assessment, marketing material. Where I'd like to focus, however, is a new feature that we announced or that we kind of deployed in the last couple of weeks, known as our Coalition Claims Calculator. So what I'd like to do is just walk you through this calculator because I believe it's a better indicator of cyber risks, most notably than historical notions around a data breach calculator. So if I could draw your eyes to the left-hand side, you can choose a variety of industries. And so I'll choose, I could choose healthcare, or I can choose not-for-profit. You'll notice that these numbers are changing while I'm doing this. I can adjust the employee count. So I'll take us to, let's say, roughly 400 employees, and I'll take the revenue up to, let's say, a $25 million company. And you can see as I'm moving these sliders, the numbers here are being adjusted as is. Now, record count is important. So I'm gonna adjust record count to, I don't know, we'll say it's, given the size of the company, let's say it's roughly just under 400 or just under 500,000 records. So also security practices. You'll notice There are little help icons, which I'm going to talk about here in a minute. But if I were to adjust kind of the security practice from best in class to standard to strong, I can see kind of the impact of that as well. Now, I do want to highlight, if you kind of just hover over this information icon, you'll see that we highlight things like SPF, which is Sender Policy Framework, or dual authentication around funds transfer fraud. DKIM is domain keys identified mail. And I'll post an article, in fact, not me, Jen will post an article that will kind of describe some of these features for you, because we're going to talk a little bit more in detail about them when we talk about our coalition risk assessment. So these are indicators that we believe are indicative of a company that has best-in-class security. The endpoint detection and response is the EDR one. And so, as you're talking to a company, or particularly in a prospecting situation, you might kind of stick with standard or the middle, which is strong, and kind of just move forward in that regards. But just to focus on the calculator itself for a bit. So these are the inputs that I put in, again, available to any coalition broker. You're able to kind of log in and do this. But you'll notice that the calculator itself is not just focused on data breach, but it also enables insights around ransomware, funds transfer fraud, and data breach very specifically. So if I were to click on data breach as an example, specific to a nonprofit entity with these particular with this particular criteria, I'm able to understand what's the likelihood of this particular company having a claim associated with data breach compared to their peers. Well, they're 2.4 times more likely to have a claim. As respects to the median loss, this is, again, using the information, the data, most notably coalition data. The median loss for this segment is $51,000. And then what we did was something that, for those of you that have spent your careers in the natural catastrophe world, or spent time in property, earthquake or windstorm, flood related coverages, you're very aware of how the actuarial world treats these types of claims, or assesses these types of claims in the context of a 1 in certain number of year type event. So what this is effectively saying is, 1 in every 10-year period, we would expect a claim from a company of this profile of roughly $326,000 associated with data breach. And then the monster claim, like in cyber, right? It's hard to do like 1 in 250-year loss events, but a 1 in 100-year loss event is, we'd expect a claim in the 1.46, $1.5 million range. Now, again, this is specific to data breach, and you can see how the curve works in terms of the percentile, and it's all kind of real time. Now, we do the exact same thing when it comes to funds transfer fraud, and you can see kind of how the numbers change as respects to our data in regards to a not-for-profit of this profile specific to funds being fraudulently transferred. And then finally, ransomware. You'd expect these numbers to be larger. We actually show you on the right-hand side kind of the average ransomware demand by malware strain, even kind of the increase that we see in severity of ransomware attacks. It's something else we show here. And so again, this is data that is specific to the ransomware segment. This, I would argue, is one of the most prominent things I think a client is interested in. And I'm not sure how many of you, but I've had many brokers mention to me, my client asks me, what's the average ransomware we should expect? Like, everyone's talking about it. There's so many ransomware claims that we see in the news. Well, specific to your entity, now you can present them real data associated with this particular segment. And then what we do, as I showed you earlier, is we combine these 3 claim vectors, ransomware, funds transfer fraud, and data breach, and demonstrate to you through actual science and data science what the median loss is, the 1 in 10-year loss event, and the 1 in 100-year loss event. And then this as a broker, I know you're always trying to provide clients the idea of how much limit they should purchase. And clients generally make that decision based upon three things, right? One is, what are my peers purchasing? Which, by the way, we still can provide that to you. Number two, they ask, what are claims associated with my profile to help me with limit purchase? And then finally, obviously, the price, right? And so what we're hoping is this claims calculator gives you the ability to provide better insight, more unique insight, using real data around these three segments of ransomware, funds transfer fraud, and data breach. Recognizing that this calculator, I'm going to show you something different in a minute, but this claims calculator is not specific to a client, right? As respects to their security practices. As an example, we do provide you the ability to export this document. You can put the company name if you want to, you can email it to yourself, but kind of export this document into a PDF such that you can use it as a sales enablement tool, right? So here, this document is here. You can see that we provide you kind of all the information that we kind of outlined on the page, as well as some material that can help you understand some nuances associated with ransomware, funds transfer fraud, as well as data breach. There are some case studies. Yes, Jen.
One question that came up that I think might be helpful to address on this document is, how do we establish the incident likelihood for an organization relative to their peers? And I know that that's on the first page of this document. We kind of establish that number.
Yeah, good question. And so what we're doing, I mean, this is all like core data. So I actually had a conversation with our head of data and actuarial science this morning about this very topic. And so what we basically look at is, on this page, which is not specific to the company, right? What we're looking at is the characteristics of this company compared to their industry segment, right? So what is the likelihood that a company with this number of records, this number of revenue is compared to the industry segment of not-for-profit, as an example? Good question. All right. So here you have limits purchased as well. So anyways, this is a PDF document. It's a client-ready document, in my opinion, that's available to you. All right. Now, I am going to transition and talk a little bit about the coalition risk assessment. These documents are connected, and I'm going to talk to you specifically about how that is. Jen, just before I move on, anything else from our audience today that they'd like me to address specifically to this claims calculator?
Yeah, there was another comment that came in that I think is interesting about the fact that, you know, in the world of insurance, averages can actually be misleading, because in the end, what really matters is, you know, the outlying high severity event. And we know from our side of the business that claims are really a mix of, you know, how likely is a client to experience an event? And if they do, how severe could it be? And I'm wondering if you can address for that individual how to think about the 1 in 10 year loss and the 1 in 100 year loss as a way to address this question about what the outlier could be for their client.
Yeah, good question. This is really about risk appetite at the end of the day. So if I oftentimes, when I was a broker, and many of you know I spent most of my career as a broker, when I would talk to clients, I would ask them, could you help me understand your risk appetite? And the client would be like, well, what do you mean? And if it was a publicly traded company, I would ask questions such as, you know, what do you think is your what is your tolerance at an EPS impact level regarding a loss, right? Are you like concerned about a 10-cent kind of impact on a quarter? At a private company level, you could speak about this in terms of dollar amount or in terms of kind of impact on business, right? So what's your risk appetite? Like if you had a cyber claims event that was $25 million, would that be really concerning to you? Most clients would probably say yes. Well, what about a $250,000 loss? And the client might say, well, I think I'm okay with that, right? I think I could actually handle that, particularly if insurance picked up like 50% of it or even 90% of it with a $25,000 retention. And so having an understanding of what the client's risk appetite is can help you and your client understand what the right level of 1 in X year loss event is appropriate for them. I know when I did when I was involved in kind of large property related risks, oftentimes companies would purchase at a 1 in 200 year event for earthquake, as an example. Well, cyber, the data isn't as strong, like as respects to natural catastrophes, right? Earthquakes have been happening for a lot longer period of time than the internet. And so as respects to your client's interest level and saying, if you were presenting this and I adjusted this is now the financial institutions industry, and you said, hey, it's a 1 in 10 year loss event for your type of company is roughly $4 million. Your client might come back and say, well, 4 million, 1 in 10 years, I think my board or me as the business owner, I think that's not sustainable. I'm really worried about that, right? And so maybe the idea of purchasing a $5 million limit for that type of client would be useful. But at the end of the day, and there's lots of ways we could have an entire webinar on this topic, but at the end of the day, it's really your tolerance level for risk for your policyholder.
Great. And one other question that came in as respects to record count. How should brokers be thinking about that data point and what counts as one PII or one PHI record for this purpose?
Yeah, it's a good question. Most insurance policies identify records in the context of how states identify what is actually personally identifiable information versus PHI or PCI. So with respect to PII and PHI, these are identified, these are regulatory standards, right? As respects to PCI and credit cards, it's not the number of transactions per se that a client has as respects to credit cards. It's the number of unique credit cards, right? So if I'm a small cafe, right, in whatever, downtown San Francisco, and there are roughly 100,000 customers, 100,000 unique individuals that frequent my cafe, well, that would be 100,000 records. Even though those 100,000 individuals may come 10 different times a year, right? And the actual number of credit card transactions is like 1 million. And so you identify the regulatory standard around PII in a given state. PHI is a bit more straightforward as respects to health-related information. And then that can give you some insight about credit cards. And Jen, I think there's actually a help article we have on that topic as well that we can share. Great. All right. These are great questions. I'm going to move on. Because one thing that we also did in the last couple of weeks is we revamped our coalition risk assessment. Now, the risk assessment that we had before was great, right? But we know that we wanted to make this document a bit easier to read, particularly for you, the broker community. And we also want it to be more accurate. We wanted to reduce the false positives. We want clients to have greater confidence in the document. We didn't have prevalent problems in the past, but I've certainly heard war stories from brokers of other assessments that they've seen. So our primary intention of releasing the document was, number one, to display a more significant amount of information that we've historically provided while maintaining or assisting brokers in presenting or being aware of items in this assessment that are simply, we want it to just be easier for you. So what I'm going to attempt to do is describe this risk assessment in the context of a broker, of an insurance person. I'm not like focused on sharing this or describing this document in the context of an IT professional. And I wouldn't expect the broker community to do that either. If most of your buyers are going to be individuals in finance and legal. And so when you present this to them, you're not going to dive into with tremendous detail around the IT security practices. We don't expect that. But we know that oftentimes a CFO or a treasurer or a risk manager or individual in the legal department will share this document with either their internal IT staff or even an external MSP or IT service provider. And so Whenever that happens, I just want everyone to be aware, if you didn't know already, is that Coalition stands ready to do those calls and assist in describing the information that we found through publicly available information in order to help your client manage risk. So what I did here is I actually chose Apple, right? I chose a really large company. And the reason I did that was I wanted to show a lot of small companies, you don't have all of the information, all of the potential pieces of information that are available in this report. And so I wanted to show a large company that has just a lot of information. And if you're, by the way, if your company, if we don't detect something on your company, like a vulnerability or a malware, that's fantastic, right? That means their attack surface that an adversary is going to attack is minimal, which is a good thing. All right, so just kind of going through the report. Again, sorry, I should identify, this is a client-specific report, right? So again, this is specific to the company. This isn't like generic information, and so it's client-ready. So just first of all, we just kind of show you the table of contents, and you can kind of see just the order in which we do this is an executive summary. We're going to talk about loss costs and benchmarking, talk through email, vulnerabilities, and some other things. Now, a reminder that this report is available for every submission we receive, not every quote, right? So there are accounts where we might not quote it, but if you send us the submission, we'll give you this report, okay? The first thing is executive summary. So we just kind of describe the information that was available as respects to the application. We do kind of identify what's the percentile as respects to all coalition policyholders and where that kind of sits. And then we have this kind of new diagram where we show the vulnerabilities by criticality, as well as the detected assets, what we were able to see. So the way to kind of think about this, and I really, as a broker, what you want to be is focused on the red box, obviously, right? A high risk or a medium risk, a low risk is less concerning. But what the red box means is that these are risks where an adversary, we believe, you could download the code, the script from the internet, and with effectively one click, exploit the company, right? So the critical risk would be one item that's identified, or one step that's identified. And by the way, when you receive notifications from Coalition regarding risks, these are almost always critical risks that we're going to notify customers. We're not going to be focused in these other risks, right? So like in this case, you know, this is Apple, but I put in bogus information about them, right? The amount of risks that we see that are medium, it's not really relevant, right? We're not gonna send anyone 4,000 notifications because that's not really what's critical. The detected assets, here are things where it just gives you a demonstration on what is visible on the internet, right? So if I have a home that is 2,000 square feet, right? And a burglar comes into my home, that burglar has to cover 2,000 square feet in order to truly capture all of the known valuables within that home. Similarly, the detected assets are what an adversary sees that is publicly visible. And we categorize this by domain, by the number of IPs, the number of application services, and the number of efforts being hosted, okay? Vulnerabilities by category. I mentioned remote desktop protocol in the past, kind of internet-enabled devices and kind of IoT kind of is here. Items associated with encryption, malware, SSL, the kind of generally on the web and storage. So these are when we take a look at all of the vulnerabilities that we showed earlier, this diagram that showed how critical they were. Now what we're doing is we're identifying those same vulnerabilities by the category. And again, this is just information. Now, I want to kind of bridge the gap between the claims calculator and a cyber incident. So now what we do is we provide you the same information that I addressed on the claims calculator. However, in this case, this is very specific to this company and their security profile. And so you have that same information available to you within the Coalition risk assessment. So if you have an account that you've quoted, the data breach, ransomware, and funds transfer fraud related actuarial science, the calculator related information is all embedded into our risk assessment now. If you were working on a prospect and you didn't really want to quote them, then using that tool within the Coalition platform, the broker resources page, that might be more viable. All right. We talked about the importance of email and how critical it is to kind of get email right when it comes to risk management. And so we started off our document around email security. And we'll post this article around DMARC and SPF, right? And kind of what the impact of these two items are. But we basically demonstrate whether or not your client actively has DMARC enabled or SPF enabled. With DMARC, maybe I'll address SPF first, right? SPF, and these are, in my mind, a couple things where if I was a broker, I would try and just understand a bit better, simply because there's such prominent methodologies in terms of protecting email. So I'm going to spend just a little bit of time on this before we wrap up. So what SPF does, SPF stands for Sender Policy Framework. What it effectively does is confirm that the email server that's being utilized to send emails is the right one, right? So you can see in this line here, it says this measure specifies what email servers are allowed to send emails from your domain. This is critical and important, and a really important signal that we look for from an underwriting standpoint as respects to email because of the data I've presented earlier. All right. Now, DMARC is equally important, and this is really a technology utilized in order to prevent email spoofing, right? And so this DMARC and SPF can work together to really protect an organization's email security. And both of these items, by the way, are free. They don't cost anything. And your client can implement it on their own and frankly have an impact on our underwriting, or they could, we're happy to work with the client and help them implement it as well. All right. So just to focus on a couple areas for email security. So the vulnerabilities, I'm going to spend less time on this simply because when we describe a vulnerability to a policyholder, the likelihood of most individuals in the insurance community being able to speak to this in some degree of depth can be difficult, right? This requires some technical capability, but we do identify the vulnerabilities that are available for a policyholder here and various items that are there. So I'm just going to kind of fly through this. These are the services. So kind of the Internet of Things devices that are there, open remote desktop protocol. We spent a lot of time on this. And so many individuals in our prior risk assessment, we didn't identify RDP in the risk assessment. And so having that just publicly visible, available to you and your client here in the cyber risk assessment is a great improvement. This certificate is an interesting concept. So this is kind of, it's security certificate, right? Which effectively identifies that there's a level of encryption that's here. Now, what most people don't realize is these certificates actually expire. And so what we can do is we can actually cross-reference the certificate, and many companies have thousands of these, but we can actually cross-reference the certificate with it being expired. And so this is more one of those things where an individual in the IT department may have just missed it. It's just hey, I forgot. I didn't realize it was expired. So we just identify it as a simple way to improve security. So IP and domain reputation, this can be significant. So domains found in public block lists. So we hope many of your companies don't have this, but if one of your policyholders' assets is found in a publicly blocklisted domain, then that kind of tells us there's something bad that's happening, right? And so that's kind of the spirit there. This Honeypot event is the idea that we have virtual computers around the world with the sole purpose of monitoring what adversaries are doing, right? If it's kind of we put a honeypot out there and we're hoping that a bear comes in and we attract a bear to it. So we have a better understanding of what the adversarial community is doing. So really, there's no reason why a policyholder's assets should be connecting to these honeypots. And if it is, obviously there's something malicious going on. Malware, I'm not going to spend a lot of time on this. This is pretty straightforward. These are kind of the records we found as respects to this particular domain that we identified. I'm going to do this pretty quickly. You guys have often seen in our prior reports kind of information that's exposed, whether it be email addresses or other compromised passwords. So we're just displaying this in a different way, kind of the amount of where the leaks were kind of deriving from. And you can kind of see a sample of some of the individuals' emails that were compromised. But the thing that I want to focus on is one thing that we're doing new is we're actually describing the password quality that we see. So we've never exposed someone's password, and that's not something we want to do. In the past, we've mentioned, hey, these are the individuals whose passwords were compromised. Now what we're doing is we're analyzing those passwords and showing your policyholder what are the passwords, what are the characteristics of the passwords that are being utilized. So how many of the passwords of this particular company, 45% of the characters were lowercase versus uppercase. How many of them use numbers in their passwords versus special characters? The composition of the password, only letters, only numbers. And obviously we we advocate that companies use and have rules around complex and lengthy passwords because they're just harder to crack, all right? Torrents, particularly in the world of everyone working from home, unfortunately, there are individuals who are logged into corporate networks that are downloading kind of pirated movies or other content. When you do that, they oftentimes come with malware. And so that's what this torrent section is here as well. All right. And then we just have a basic document around coverage, right? This is the one area that is static in the document currently. All right. So my hope in kind of going through these two items is in an attempt to help you kind of understand. At Coalition, we are a very data-focused company. Our belief system is that when we couple data with security and insurance, frankly, there's magic that happens. And policyholders can benefit from real-time information around improving their risk profile in this grand attempt we have partnered with you to solve cyber risk. I personally am grateful for your attendance today and will welcome the opportunity to entertain any questions you may have.
I've gotten a couple of questions come in, and the first one I think is really interesting, going back to the claims calculator, which is, do we observe any differences across geographies that might make a material difference in terms of claims cost or losses?
That's a really good question. I will tell you, we have this general belief that technology is agnostic to geography, right? Like our ability to understand what's happening in Canada versus the UK versus the US, the technologies that are being utilized are agnostic. However, what we see is that there are trends, right? There are certain security providers that advocate for certain technological tools in one geography versus another one. We also, just the nature of how the economy works, right? We may see a greater, proliferation of manufacturing entities in the southeast of the world, Southeast Asia, versus, San Francisco as an example. And manufacturing entities have a specific industry, have a specific correlation to certain types of cyber risks versus other companies that might be more prone, for example, to funds transfer fraud as an example. So that would be kind of my general response. We can certainly pull the data, and Jen, you might, we didn't have anything necessarily in the report, but you might have some additional insight there, but that would be my response at just a high level.
Yeah, and the only other thing I would add to that is on the data breach side, obviously certain regional specific nuances as respects to fines and penalties for data exposure. And as Sean mentioned, sort of the geographic concentration of different industries, with tech companies being concentrated on the coasts and having greater tech E&O losses. But those are the main things that we would see as respects to geographic differences.
Great call out. Yeah, the regulatory landscape is a significant one. Great point.
Another question came up about explaining this to clients, and in particular, explaining the coalition risk assessment and how to talk to some of the more technical aspects. So Sean, I'm wondering if you have any advice for how our broker partners can do that, and also involving coalition security team as appropriate.
Yeah, I think this is honestly like my greatest concern, right? And I think it's a very important question. We at Coalition, we think there's a way to truly manage cyber risk. And we think it requires some technical knowledge, some technical information, at least from an underwriting perspective. And I think you would expect this, right? If you are going to talk to the environmental insurance community, you're going to deal with environmental scientists, like PhDs in environmental science. In the M&A community, it's M&A, transaction liability, it's M&A attorneys. And so in our world in cyber, we think it's important that we have the technical capabilities, which is, as you all know, over 65% of our company are individuals dedicated to technology and security. So we're pretty committed to this. However, from the broker community, it's not always easy to become like a technical expert in some particular fashion. And so what I tried to give you was a few high-level things to focus on, right? If you focus on email security, if you understand what remote desktop is, if you understand kind of why passwords are important as respects to managing email, I think that can go a long way. I do want to mention that Coalition, we stand ready. If you have a coalition risk assessment and you want to approach us and say, hey, Sean, I just want to talk like the top 2 things I just want to become knowledgeable about. Can you help me with that? We would love the opportunity to kind of have that conversation with you and arm you with information in order to feel prepared on that conversation. In addition, if you ever want to present a coalition risk assessment and you're just saying, hey, I don't really have the time to like dive in and understand this any better, but I would love for you to kind of share your thoughts. We're happy to do that as well. So there's a lot of ways in which that document, we've embedded links. We have these articles that we have that can help you as well. But if you're still uncomfortable, we stand ready to support you in any way we can.
Thank you, Sean. And I know that we're actually a little bit over time, so I think we can probably pause there. But I want to thank everybody again for joining us this morning and spending part of your day learning more about these 2 tools. I just want to reiterate what Sean said. Our team is available to support you and your clients with understanding their cyber risk and their exposure, and particularly understanding these 2 documents. And we would welcome you to reach out to your business development representative or anyone from Coalition's broader team if you'd like to learn more. So thank you again, and we appreciate your time and hope you have a great rest of your day.
Thanks, everyone.